why Warren Buffett prefers cash to stocks right now. Now, let me just tell you, I have a bias. I have no money in stocks and haven't for a long time. The stocks I invest in are my own business. I have plenty of videos out there that you can scroll through and see what the problems are with the stock market. But this is a reaction to Warren talking about this in this article, and Barron's written about him. It says, he's renowned for his stock picking prowess. And I want to be careful with what they're saying there right out the gate. Stock picking or company buying? Is he just trading stocks? No, he's buying controlling interest in companies that are publicly traded. That's different than stock picking and being like, oh, I'm going to put $1,000 into this stock. That's a lot different than someone saying, I'm going to take enough interest in this that I can employ my management team. But right now, he's talking about his favorite investment appears to be cash. Berkshire Hathaway was a net seller of $10 billion of stock in the first quarter, including an estimated $6 billion of Chevron. And the company made another $4 billion of net equity sales in April, Buffett said at the annual shareholder meeting Saturday in Omaha. Berkshire's total cash investment hit $130 billion, or actually more money than the entire FDIC has in cash, by the way. That happened at the end of March. More than $1 billion higher than at year end, right? So Buffett said Saturday that his cash grew by another $6 billion to $7 billion in April due to the equity sales and about $2.5 billion of after-tax operating income. So that's profits, right? Buffett seems more than happy to sit on cash now that T-bills yield are above 5%. Buffett joked that if it's not killing us to hold so much in cash in response to a shareholder question about Berkshire should be distributing some of its cash hoard to shareholders. The company pays no dividend. So anyway, let's talk about this for a little bit. All right, so when they say cash, but then mention treasury bills, treasury bonds, or treasury notes, those are considered to be among the safest investments available, but there's still a small amount of credit risk, right? This is the risk that the U.S. government may default on its debt obligations, which could lead to a loss of principal for investors. So recently in the news, we've heard about Janet Yellen saying, oh, well, we could default on things if we don't raise the debt ceiling. It needs to be, it's $31.5 trillion the government's in debt. So when does the unlimited taxing power no longer really have power? That's one of the questions here. But for the most part, someone even like Buffett is saying, look, U.S. Treasury bills, bonds, and notes are considered the safest, most stable investments available. Now, we're not talking about inflation risk. We're not talking about, opportunity costs, just that you can expect to get it back. So they're backed by the full faith and credit of the U.S. government, which means, that's a low risk of default. But let's talk about the difference between these. So the main difference between treasury bills, bonds, and notes is when they mature. So if you put money in, when is it that you get the money back? Or when do you have to take the money back in some cases because interest rates have changed? So treasury bills have a maturity of 1 year or less. So you're putting it in, you're getting your interest, and you get the money back in 1 year or less. While treasury notes have a maturity between 2 years and 10 years, so a little bit longer term. So when people think, interest rates, they're likely to go down, so I'd rather have this for 2 to 10 years than 1 year, because when you go to renew, then interest rates have lowered. But if you've locked that in, that could be better. And treasury bonds have a maturity of more than 10 years. So the interest rate, treasury bills, bonds, and notes all pay interest, but the interest rate varies depending on the maturity. Generally, treasury bills have the lowest interest rates, followed by treasury notes, and then treasury bonds. But sometimes you hear about an inverted yield curve because of where interest rates are heading. Right now, interest rates are going up, which means as you have really long treasury bonds from years ago, just 2020, 2021, those values have decreased because if you want to sell to someone else, you have to sell at a discounted amount to match what interest rate they could get on a brand new one. So there's an issuance frequency here. Treasury bills are issued weekly and treasury notes and bonds are issued monthly. So Warren Buffett's saying, hey, look, I just kind of see this as a really safe place to park my money and not bad yields, considering for a long time he said, hey, you should get used to lower returns in the stock market overall, and maybe investors should be happy if they get 5 or 6%, where in the 90s people were thinking 15 to 20%. So that's interesting, but he's also going out and buying companies that they understand and saying no to companies that might make money but aren't in their wheelhouse. That's different. I want everyone to be clear about that. buying a stock versus owning a company are two different things. Just a stock represents a small piece of ownership, but you don't have any control or very limited control on who's going to be in the board and how that's going to work on daily operations, where Warren and his companies have a whole lot more control. So maybe a sign of going into a lot of cash means waiting for an economic kind of slowdown or meltdown or problems where he could swoop in and buy things at a better value. People often sit on the sidelines. We saw the wealthiest individuals in 2019, there was a lot more cash on the sidelines, between 37 and 39%, depending on what you were reading. And then they could capitalize when the markets are down or when the opportunities are there. And so maybe that's part of what we're seeing here in some of these actions, feeling comfortable that it's a good interest rate, but also saying, let's wait for the right deal and not buy when, before kind of the crisis has happened.
Hey, thanks for watching. I appreciate it. And if you're enjoying these videos, well, there's good news. More where that came from. So go ahead and click through and watch the next video now.